Greetings, market rebels. Welcome to this week's macro measure combined with the sector situation video. It is Friday, October 31st, 2025, All Hallows Eve. Here's our trusty market rebellion disclaimer. Here is our trusty market rebellion intellectual property rights notice. And here is the start of last week's review. We went with this quickie thing that we put together, just called hastily, called the case of what you would expect with everything shaping up the way that it was as you head into the best part of the year, what's often the best part of the year-end seasonality. So I'm just going to refresh on that. And well, I guess I should also note I'm Wayne, as all of you probably know, but we'll go forward now from there. So that's why we went with all systems go. Don't want to belabor this because the whole point of me recording this earlier than usual is to try to get this out before the close, because I don't want to sound as if there should be a panic. I just think that it's, depending on how this market closes, this looks sketchy right now. So if we can get this out and everyone can sort of maybe address it really quickly, it might be helpful. I don't know if the notes will go out with it or whatever, but whatever the case. But bottom line is we're just going to zip through things as quickly as we can. We talked about the megas. Probably the best thing we could have covered last week was the megas that were on the launch pad. They didn't really give you much of a chance to dilly or dally there on the open on Monday, but they got a hold of a lot of those names we talked about and just went haywire to the upside with them. And we thought that, really, other than that, only major news developments would undermine this market on its way towards the EPS euphoria. And so that was probably the most helpful thing last week. This week, we're going with this hastily put together video with all not so fast, because I'm kind of hesitating here with what you saw this week. You could say, well, this is great. We broke out. Everything went really, we had some great performances in terms of EPS and all that stuff. But once they go into the books, right, they're really tend to be backward looking. And then the commentary on these conference calls is forward looking, and so on and so forth. But there's some things I didn't have time for. I saw that the NVIDIA revenue is the most, in terms of percentage of GDP, it's absolutely enormous. It's the most that's ever been registered by one company, and it's an enormous percent. I think someone had said it's just, if the percent is in the teens in terms of U.S. GDP. I haven't verified that, so that's coming from formerly Twitter. So whatever the case may be, but that, along with some other things like the concentration, some are saying that the big mega caps are basically, essentially at this point, they're 42% as a group. They're 42% of the U.S. market as a package. So I don't know if that's ever been higher, things like that. But I think these are super interesting times, and it's possible the market got ahead of itself while spending nearly all the news propellant, meaning, right, that you've got Trump coming back from his trip. Trump, of course, being Trump, is always going to put the positive spin on things in the Trump way. Everyone tries to do that. Trump does it a certain way. So you knew coming back from there would always be spin that everything went great. Maybe it did. I don't even know the details of all of it, so I'm not pretending either way. We're going to do a quick tabs check that I'm going to get into, but I'm going to say, right, is there more risk than meets the index eye before we get to that? Because the reason I'm saying that is, let me see here briefly. Okay, we're back. Had to do a quick pause there. So we've got a lot of this news propellant you would think spent. Now, if there's some, right, as they say, 11 or 12th hour deal where they do something in Washington, or there's something else positive or negative, obviously that could change things dramatically. But I think what's really happening here is that some rough stuff has happened beneath the surface of the market. It doesn't mean that it's over at all. I'm not saying that. In fact, we've been maintaining, like, there's been a lot of upside potential, and the market keeps really finding it. I would say it's doing it in sort of a questionable way, that it keeps doing this. But hey, you got to take what you can get. So that's good. But a lot of things that were working from the long side stopped working aside from the megas. Not all of them, not all the longs, of course, stopped working, but aside from the megas, it just really wasn't there to a large extent, which tells me, something may have shifted, the pattern may have shifted a little bit. But what I want to try to do is cover this stuff in with a chart in front of us and some of these tabs. So let me just do a brief pause here. We're going to move this out of our way, and then I will get to these tabs I'm talking about. There aren't that many, but I think it's worth getting these in front of everyone if we can before the bell. So let me just bring that up, and let me see if I can get that. Where is that? Yeah, there it is there. All right, so now we go back to share, and let me get screen. This will be screen 3. So this is very interesting in that we have fear greed index here, smack dab in the middle of fear, not extreme, but in fear. And so things are, that should tell you something, right? Where you're what, a day removed from an all-time high here or there, and you're getting fear readings. I mean, that's not normally the case. Um, Here's the AAII sentiment survey. And what you can notice, and this is again potentially contrarian, you can see that we are at one of the highest bullish readings that we've had in months. It is not the highest. The October 8th was higher right there. But you have to go back to, it looks like July 2nd to really find the third place finisher. So that ought to give you a sense, right, that over the past several months, really, we haven't gotten much higher other than maybe right here one time. So you're not extreme by any measure, I think, but you are really tilted in a way that you weren't. You could see how the bearishness really dropped off and the bullishness really picked up. The neutral, as usual, is relatively unchanged compared to those two. So going back to here, you've got you've got things in place. You can see how things shifted on this graphic. But so you're above, right, your historical averages in both cases, right? So there's more bears than normal right now, and there's more bulls than normal right now. But that should tell you, right, with these two, that things are just, there's something that's different right now because you've got more bears than usual. You've got a high bull reading, the second highest bull reading we can find really over the course of the past, say, 5 months, 4 or 5 months. And you're already in fear, and you're just what, how far removed are we from the highest high? That was Wednesday in QQQ, SPY. It was also Wednesday. So you're 2 days removed from a new all-time high after sprinting up there, right? Starting late last week, which has been the pattern. Start on a Thursday afternoon and then scamper all the way through to Monday, and then really sort of tread water for a few days and then reignite on Thursday again. And the whole pattern's continued to repeat itself. But this is also something that is part of that mix, which is why I have it as the next tab. And you can see, according to Charlie Bilello, who puts out a lot of stuff that's interesting, I think that's why I follow him. And he says the active money managers, their exposure is the highest it's been since July 2024, and they're over 100 since they're leveraged long at this point. So that's obviously contrarian as well. That's a contrarian take I would have on that. We have Dave Keller, who is a part of the Chartered Market Technicians Association guy, and he's a stock charts guy, stockcharts.com guy. Anyway, he's talking about the second Hindenburg omen in October, and you could take that for what it's worth. But if you look at some of these times when the Hindenburg omen has appeared, the aftermath not too far after has been a little rough. You maybe can see it. Another look that he's coming up with: healthy bull markets are marked by an expansion of breadth, and he's pointing out, which this is what we talked about this week in one of our webinars. He's pointing out that breadth just continues to slide away from the highs as the SPX or SPY continue to move up, and away. So that's obviously a persistent divergence at this point, compound divergence, call it whatever you'd like. There's another look at weak breadth. So here's another Hindenburg omen, where what happens in the aftermath of that. And you can see that there's some declines there, not all declines, but some. You get 83% of the time the SPX is lower from when the Hindenburg omen appeared 2 months later, which would put us right at the end of the year. So, this is interesting. That's why I'm going with super interesting, not just very interesting or something. This is becoming super interesting because you don't see all this stuff usually all at the same time. And we've been talking about different facets of that, right? Other aspects of it, like precious metals doing what they did, like stocks just doing what they did at the time. All these things just powering and powering. At one point, crypto was part of that, and then it backed off. Not going to go into this, but this woman, I can't vouch for her. I'm just saying there's other things out there like this. They're claiming that there's a massive banking problem that starts next week as a result of what's happening with DC and other layoffs and all these things that have been building up under the surface of the economy and due to the DC political standoff or whatever you want to call it. So take that for what it's worth. You can check it out yourself. I don't know. This is definitely something I don't have time for, but I can understand the basics of it and how someone could arrive at that, at least superficially. They might even be dead on accurate with everything they're saying. I don't know. But I'm just saying that that does make some sense where, right, if people that are having to go to the well more and more, it does create a problem. And I think Ryan's been talking about repo, reverse repo, and how things have been showing up. And that might be one reason why KRE has been seeing put side activity, which we'll talk about. Then uh, there's Henrik Zeberg or Zeberg. I'm not sure how you pronounce his name. I guess if he's German, it would be a Berg. But anyway, the point is that he's got a business cycle model that he touts. He's got the LEI crossing into negative territory, and when that happens, it's never, according to him, it's never been wrong, which I guess he's done through back testing, so on and so forth with data. But you can see that this plunge is happening. So this is part of the whole. This is super interesting because I continue to see concerning things about the economy. We all know that the economy is not, the stock market is not the economy and vice versa. But it's certainly better, I think, to have the economy heading in your favor rather than pulling away from you, right? And that's, I'm sorry, I mean, heading in the right direction rather than pulling you down is what I meant to say. So that's to me a concerning situation, especially because things have become so narrow. And so the market can do this. We talked about how AI could make the bottom, not that I'm an expert on this either, but that AI could really start to show up soon. It may be showing up. I don't know. I think there's signs of it. I said that a while ago. I'm saying it again. I think there are some signs that AI is starting to take over some tasks, and you're seeing these waves of layoffs that are reducing the workforce and helping the bottom line. And so that you could continue to have that. So that again, like I don't want to, it's not like this is some kind of a crash call. I just want everyone to know that, we try to be objective. We try to stick with nuts and bolts. We don't try to pretend that we're experts on all these different things. It's pretty hard to be an expert on everything anyway, but I like to rely on the messages from the market because as I say, learning to read charts and sort of put a picture together and maybe draw inferences and things like that from what the markets are telling you is probably, in my opinion, the best way I've ever found anyway. It's the best way I've ever found that you just let the charts tell you what to do and try to go with them. And that's why we've tried to continue to basically be bulls, nearly all the way through the whole time. When things flip, we want to flip with them and go with that. And so you haven't broken the upsloping channel. You still haven't done that, but you're starting to see real problems. And usually these problems do uh, appear in front of sell-offs, right? So you're seeing the kind of stuff that you typically see. That's why I'm trying to bring this out and bring it out quickly and get this out. So you've got oil, which is its own special situation up here, energy. You've got technology, which has become really not only the lead sled dog, but the only sled dog at this point. If you look at it, that's where how narrow it's gotten, where communications are not performing the way they were. They've put a lower high in and they rolled over, and I'll boost that up a little bit. You can see that. You can see XLK, how that's hung in there. This is due probably to a few stocks this week, and that's it, right? So that's kind of more of the same, much like the Qs and SMH hanging in there. But after the run they've had, right, and what's going to really bring it about, right? More news from where? Only thing I can think of is maybe there's some kind of Washington thing that's not unexpected. I know there's all kinds of rumblings about things going on in Venezuela, domestic issues cropping up in U.S. cities shortly in terms of protests that are going to be ramped up and what that could lead to. But here's your financials. Again, rolling over, not really looking great. Here's your real estate, XLRE, rolling over, not looking great. Even healthcare, which had been powering, rolled over this week, not looking great. Staples got annihilated this week. You've got they're trying to put a save together here in discretionary, but again, struggling to go. Transports are doing what they have been doing, which is probably confounding a lot of people because I've been seeing that freight and so on and so forth are is really struggling. So that's not really, no matter what, it's not looking like it's powering right at the moment. So it's kind of neutral to negative. You've got basic materials, which look like they were going to continue. They're correcting and they're coming off way down, way hard. XLI has not been able to really go, probably for various reasons, despite supposedly good news and this great earnings and so on and so forth. And then power, right, with XLU, even I guess sort of confirming it's no longer the defensive place that it used to be, at least for now. It's also in a tailspin this week. So I don't know how, again, I don't know how you look at market breadth and say things are looking great. There was someone out there, and all due respect to whoever this player was on, he's a technician for a big firm. He's touting what's happening in terms of breadth. I don't see it. Maybe he's operating on a longer term time horizon. I just have a really hard time with the basic checks that I like to do here in this video. I have a very hard time saying, yeah, I see market breadth getting better because I look at sectors for that to see how many are helping and participating and how many are hurting. And I think it's very clear that not many are helping and several are hurting. And this is when you're supposedly in the midst of this great bull market and this great phase where you're supposed to close out the year. And we strongly, and you still may, but it's been distribution, right? If you go back to SPY on Wednesday, they opened it up and sold into it. Thursday opened it up and sold into it. Today opened up and sold into it so far, and they're staving it here near yesterday's low and below, right below my one support line that I've got in there. So they are saving that there in SPY, and I hope they do because otherwise it's going to be a problem. But I think they really know that technically they're playing with fire because as of right now, the whole late Thursday save or move higher, then ramp through Friday, then keep going on Monday thing, that's really off the rails at the moment. They need to really turn this thing around, and maybe they'll do that. Now, you could say some of this is expiration related. It very well may be, but in terms of the good news being out there, right? Pretty much all your mega caps have reported. You're really not getting anything. I'm not sure what's on your horizon that's going to, with Trump returning and all so on and so forth and all that kind of stuff, as they say, all that jazz. What's going to be the new thing to just continue to go on, especially because it looks like sentiment tipped towards bullish, and there's a lot of overcommitted longs now where that hadn't been the case. It looks like, as we were theorizing, they really had to try to play catch up in October, and they may still have to. Now, that could propel things all the way through year's end. But I think with the way market breadth looks, Hindenburg omens appearing twice in a month, the track record of being down 83% of the time, 2 months later, if that's assuming that's all accurate, according to these contributors. Kind of concerning. So here's your advanced decline cumulative average and advanced decline line, and they clearly have taken a hit lately. They're trying to put a little recovery together again late in the week, but it's not really amounting to much. If you look at the number of stocks above the above the 50, 100, and 200, you can see this is really taking it on the chin this week, right? So you are sort of finishing out last week, and then you come into this week and it's bad. And some people are trying to discount that and say, oh, these are lower tier names, and some of these are real estate names. Now, I'm sure there's some accuracy. They wouldn't say that at all, but that's kind of a concerning area when you think about what could happen in terms of financial system spillover that we've seen before. And a lot of this stuff, there's a lot of BS going on in that space, as there always seems to be. Same thing with banking. You've got these reverse repo things Ryan's been talking about. You've got that contributor on X claiming there's going to be a run, there's going to be like a mini bank run potentially because people are going to take out whatever they have to. If this EBT card thing becomes a bigger problem and there isn't an 11th hour rescue. Here's your cumulative volume index, right? Pretty serious decline, not much of a recovery here with just an hour to go. Let's go into, gosh, boy, this is fighting with me bad. We don't have a lot of time because I want this to render quickly. And so you're getting a slight recovery here in the McClellans, but both of those are really not looking good. It's hard to make the case, I think, in the short run that the breadth is looking good, and then you're getting these new high, new low net kind of, and this is, you can see this is getting red. Now the good news about that is that in an uptrend, when you get a couple of days bunch like this, that is often near a bottom, not at a bottom, but near a bottom. So in other words, if they don't crack support, and we hold, then you probably have seen enough selling for the next round of buying to ensue, and we try to, continue to go. But these are the normalized new highs, new low index. And you could see too that the new lows have jammed up and new highs have really rolled over again. So I don't want to belabor that, but between all these basic indicators here and between the sectors, I'm not sure, again, how you can make an argument that you're in love with what's happening. Also, right, the kind of distribution we've seen. So with all that market breadth data and sectors being sold off, you'd have to say, right, there's distribution that's been occurring. And then you've got the one tab we checked out from Dave Keller, who said, hey, check this out, that you've got this market breadth deterioration that's being persistent as the market rises. So the nature of this being, I would say, shenanigan laden, right? This is, to me, is more squeezy type behavior, get people on the wrong side, break things out. Not really great volume supporting all this, as we've seen. And now you get three candles worth of distribution in the short run here. So all your trends are obviously still up in SPY, and you're not near the breakdown levels. You'd have to really take out probably the 50. But I do think you could visit the 50. I do think, right, if this is the start of something more, there could be a sharp pull, even in a bullish case, could be a sharp pullback somewhere between the 20 or the 20 and the 50 or the 50, right? You just can't say for sure before, right? Sort of like a final shakeout before they maybe ignite, I should say, the year-end jam job that we often see. So you have to consider that, I think, as one scenario that could happen that way, especially after the running we've seen. And again, my question would be, what on the economic calendar or what on the political calendar, what would you point to now, aside from maybe Nvidia's earnings, that can get everybody jazzed up? I'm not sure what's going to be. All the jazzed up propellant pretty much was spent recently, right? For the most part. And here's the cues, right? So I would say a similar scenario. So I'm not banking on gap fills, but just the nature of what happened here to me, just dubious, shenanigans laden, as I say. I don't think you can rule out coming back to that support line that I'm mousing over that refuses to turn blue. I just did finally. That's right near the 20 anyway. So that would be, where I would expect this to come to. Effectively, that would almost be a gap fill anyway. But if you're going to talk about a downside move from here, I would expect it to come into there and support. Now, I usually say support, um, because that's a support area, but we always expect to have support the first time it's touched. The thing is that there's a caveat to that, which in my mind is if there's really serious news developments, that's something you just don't see that often. That's what I would call material that it actually really matters. That's when I would say that I'm not really going to always bank on that. I'm almost always going to expect it under normal conditions. It's hard to say what's normal until you've been in the game for a while, but you have to develop that feel. But I did check out some other things that were really stretched. Another sign that's been kind of rough is that here's there's a save going on right now in IWM below its support line. It dipped below there. So again, this could be a shakeout move, and this could be the start of something bigger to the upside because they may have gotten enough panic going here with today's distribution, and now they're in save mode with less than an hour to go. And I don't want to belabor this, but it's pretty much going to be similar, right? Except for IWM, it's going to be similar in diamonds and SPY and QQQ. So I think for now, you've got to give the benefit of the doubt to uh, you got to give the benefit of the doubt to the trend and the seasonality that should kick in. But I think you got to go to DEFCON 2 because until you start seeing things improve a little bit, where you feel like, okay, I'm on better footing, or put another way, this market is on better footing. But there's some things that are happening, like the dollar DXY here, and this might be undergoing a trend change. And as many of you know, we used to chart this all the time when it mattered, and it's usually inverse to the market. And you can see that it got clobbered, right? So the dollar got clobbered, and they've been jamming stocks, and now the dollar's on its way back up. And often when you see the dollar normally higher, I mean, it's a strong dollar moving back up, trending higher, isn't normally good. Dollar going lower is normally good for stocks, in my experience, especially in the modern times. Now that could shift to something else depending on the overall situation that we're operating within, but I would still treat it that way. And you can see that on this weekly chart, it it really trolled around there for quite a bit of time this year, and now it's starting to ascend. And that's could be the start of a bigger move, and that might not be such a great thing. The VIX also wanted to cover that because that's probably better seen on the daily because just the nature of the VIX charts. But the VIX also, they took this down hard, and then I think they knew they were going to be able to work with the EPS and things like that, and the Trump positivity that's always going to come out of Trump doing an Asian trip and meetings on trade and so on and so forth. This started rearing up a little bit today, which is a Friday. So that's a little bit of an interesting thing. We don't see that often. And then another possible shakeout could be happening in crypto, where they they took out this former low here yesterday in BTC, and now, right, maybe chase people out that were trying to trade the bounce off that 150 SMA there in Rust, or just general support there at that level. And now, right, it's showing early signs of holding for sure. So I would keep this on just in case, because if you want to, if that starts lifting, that's normally a sign of risk on. And if it does go risk on, that's better, probably better for the market in most cases. And if it starts to go from here, right, it could be the start of a larger move back up to the top of the channel. So just keep an eye on that, because for now they did kind of pull off a short-term, potentially bullish move with the shakeout. You can see the shakeout last time around was at least good for a couple, like a week and a half worth of upside attempt, let's call it, right? But now it could also lead to another upside attempt. Again, I think that would be good. And there's really a hell of a save attempt going on here in this market right now with such little time to go. But the other thing, I'm trying to think of the other things I wanted to cover. So let's see here. There was one or two other things that I wanted to look at. Yeah, that's right. It was SLV. We'll take a look at that. This has been struggling below the 20 there in blue. We did see some more paper on that. We did see some massive VIX paper. I believe it was January where they were buying VIX calls of almost 130,000 is my recollection. So that was interesting. You don't see that all the time as well, especially January, right? Because that's really going to potentially hedge somebody, or a speculator's going to dream, over the course of what should be really good seasonal performance from the market. So that's kind of an interesting development. We saw some Q put buying. I did add some, as I said, I did add some VIX spreads again, because my plan is, when this sorts out, to get long into the seasonality if, right, things play out that way. So I want to have the hedges on just in case. I'm probably going to keep them on, like I said, a little bit longer for now, and then go from there. Trying to think, GLD, we'll take a look at that. Somewhat similar story. So these have pulled back, and if they get going again, they have been really good traders. That would be nice. But the history here is against these things. As I said, I kind of chilled out with what I had in a bigger way, but I'm still long physical. I'm going to plan to be long that for a long time. Anyway, so that's that. I'm trying to think of my other stuff that I wanted to. Yeah, and so another thing that's happening here is it's requiring this. This is really for the size of the company that it is, and so on and so forth, just to mask over things to the degree that they are today. It's requiring this extraordinary move right out of Amazon. Just extraordinary. And they really came in, and they've been selling into this. And we've seen a lot of this stuff. We also had an AMD, a really large AMD put buyer. Now, obviously, that could just be a hedge in front of EPS. It happens frequently that way. But I just wanted to mention that as well, because maybe, right, a lot of the good semis news has been priced in, and maybe they're right that it's been priced in too much. I don't know. I'm just passing that along. So I'm trying to think of what else I wanted to cover on the charts. So yeah, I think just because we're in the time crunch, I'm going to have to try to just go through this, and we'll call it. I just wanted to bring that, this be careful. I'm going to be a lot more careful now, as you heard already. I cut down on a lot of longs. I'm not nearly as long as everything. I'd rather start to see things get sorted out better, and then start adding big and using the comfort of my hedges to be able to have the confidence to do that, and to the extent that I plan to, and so on and so forth. But anyway, some of the thoughts are there. We talked about a lot of these things already. Very narrow advance with really, I'm overusing only, but only the megas really contributing. There's been this super high concentration we talked about. The patterns are changing to an extent this week, and overall with just sectors and distribution happening. Talked about the money managers where they are, which they kind of overcommitted potentially at this point. We talked about KRE. We talked about those reasons. And then, okay, yeah. So again, I talked about the kind of dubious nature of what we saw this week. Talked about that. We didn't mention the FOMC shift, but probably not really what the market would love to hear is that Powell's not so sure about, he's not so sure about what's happening for December. That seemed like it was a lot more of a sure thing not too long ago. We should be raring to go, but we're seeing this distribution. So a lot of people seem to be saying, I don't care about the seasonality and what normally happens here. We're going to move out of all this stuff for now. And then other players are sort of late to the party, getting overly long, with bulls being overly weighted relative to bears right now for the first time in a while, and where it's been this strong in the surveys. So definitely things that are tough to sort through and not really ideal. So we're still above the channel support. We talked, where are you to? I'm just going to say repeat, because we're kind of back with, you need to hold. The potential, I think, is still there in the market. It's just that I don't like all the stuff that's happening under the surface. That's really what trying to get this out early is all about. I'd go to DEFCON 2, meaning I wouldn't really be ready to do something immediately. I would just have it all sorted out, what I planned on doing. And then if things don't finish strongly today for whatever reason, or they don't start to repair themselves next week, I would be ready to potentially hedge more, the very least. But I would wait on that to see how things behave. Right, as of right now, the save this afternoon, the latest late save of this market, is working this afternoon so far. So that's where I'm coming from on that. I'm going to say that the case we mapped out last week, which was this is why these are still a lot of good reasons. Not all of them are as accurate as they were last week, but that case is why you would still want to think that you have that potential, along with the charts not breaking in terms of support. You're still within channels, you're still moving up. So we'll see. I would not sleep on the Trump penchant for newsmaking. I continue to say that. I would have all this. I told you what I did. I'm going to continue to be nimble, let things sort out further, just as I said. I'm just going to go with the standard warning because I think you have to be. Now, I think there's clearly something afoot here late to make sure that this doesn't end on a super ugly note. And we've seen this many times before. It's very clear what's up, and it looks kind of suspect, but they've been able to pull it off where it's sustained itself at least through Monday. Sometimes it's led to a turnaround Tuesday after that kind of a positive Monday. But for now, right, they're pulling it off. So again, the benefit of the doubt goes to the trend. But this case, too many things are out there that are dubious, right, that are questionable right now that you have to, I think, be a little more focused on the risk side rather than on the risk side rather than on the reward side, because well, of what we've covered. And I tried to do as quickly as I could so we can get this out. Once again, it looks like it's going to be tough to pull that off. I guess I have to even start sooner. I started sooner this time, but oh well. So that's why this is a little truncated this week in some ways. So I just hope that this helps in some ways too, and wish everyone a great, safe weekend. And hopefully we'll come into a market that's been able to hold itself together. Maybe we'll start getting more real if that seasonality is allowed to kick in the absence of news. So on that note, thanks for tuning in. Everybody take care.